Hello everyone, welcome to our market analysis for September 2nd, 2025. Today was one of those days on Dalal Street that reminds us why the stock market is so fascinating. It was a day filled with ups and downs. A bit like a thrilling T20 cricket match where momentum swings between teams. The morning started with nervousness as investors watched global cues, but as the day progressed, the bulls, our market's optimistic players, took charge. They pushed the market up, painting our screens green by the closing bell. Market sentiment shifted within a single session, from cautious pessimism to confident optimism. Imagine planning a picnic. Morning, dark clouds. You think, maybe we should cancel. That was the market's initial mood today. Then the sun peeks through the clouds. The weather forecast improves. You decide to go ahead. That's exactly what investors did. They saw positive signs, good news from certain sectors and stabilizing global markets, and started buying with more confidence. This shift in sentiment is powerful and a crucial lesson for new investors. This daily drama is a story told by millions of investors through their buying decisions and their selling decisions. Every tick of the Nifty and the Sensex reflects collective hopes, fears, and expectations about the future of Indian companies. Today's story was one of resilience. Despite early jitters, the underlying strength of the Indian economy and positive corporate news helped the market recover and finish strong. These are the days that teach investor psychology and show the factors that can turn the tide. We'll dissect this roller coaster. We'll look at final scores, the Nifty 50 and the Sensex. We'll explore star-performing sectors and those that lagged. We'll zoom in on breakout stocks. We're not giving tips. We're learning the why behind the what. Understand the reasons, become a smarter observer. Let's get started on this learning journey together. Let's start by looking at the final numbers, the scoreboard for our market's big match today. The Nifty 50, which is like the average score of the top 50 companies in India, closed at a fantastic 24,150 points. This was a gain of about 180 points, or roughly 0.75% from yesterday's close. Think of it this way. If the Nifty was a student, it scored a solid A grade today. It opened a bit lower in the morning, creating some suspense, but then it steadily climbed throughout the day, showing strong momentum, and finally closed near its highest point of the session. This is what traders call a strong close, and it often suggests that the positive sentiment might carry over to the next day. Similarly, our other star player, the BSE Sensex, which tracks the 30 largest and most actively traded stocks, also had a great day. The Sensex finished the day at 80,500 points, which was an impressive jump of nearly 600 points. This translates to a gain of about 0.75%, mirroring the performance of the Nifty 50. When both major indices move in the same direction and by a similar percentage, it indicates a broad-based market rally. It wasn't just one or two big companies pulling the market up. Many different companies from various sectors contributed to this positive movement, making the rally feel more robust and healthy. To put these numbers into context, a 0.75% gain in a single day is considered quite a positive move. It signals that buyers were more aggressive than sellers. For most of the day, the buyers' team was pulling the rope much harder than the sellers' team. So, what were the big reasons, the main catalysts that pushed our market higher today? One big factor: positive global cues, especially from the US markets. US economic strength boosts our IT sector. Imagine, your biggest customer is doing well. They'll buy more. The US is a huge market for our software services, so signs of health improve IT earnings outlook. Domestically, strong macro data drove gains. India's manufacturing PMI for August came in stronger than expected. PMI is like a monthly health report for factories. Factories are busy, production is increasing, new orders are flowing in. That builds investor confidence. Strong indicators give the market a solid base for higher gains. Another fuel: continued FII inflows. FIIs are large overseas funds investing here. Recent data: FIIs have been net buyers. They've bought more shares than they've sold. Big global players showing faith creates positive sentiment. Like a top critic giving a 5-star review to a restaurant. That foreign capital brings liquidity and validation. Our first breakout stock to study is Tech Mahindra, a prominent player in the IT services space. Today the stock was on fire, surging by an impressive 4% to close at 1,560 rupees. This was not just a small jump, it was a significant move accompanied by a massive increase in trading volume. The volume was almost 3 times its daily average. Big players, institutions. When a price move is backed by high volume, it gives it more credibility. It's like hearing a piece of news from one friend versus hearing the same news from 10 different friends. The latter feels much more believable. So what caused this sudden burst of energy in Tech Mahindra? The primary trigger was a major announcement from the company. They declared that they have secured a multi-year deal, a multi-million-dollar deal with a large European telecommunications company for digital transformation services. This is fantastic news. Think of a construction company winning a contract to build a huge bridge. It guarantees them revenue and work for a long time. This deal adds to their revenue pipeline, reinforces their expertise in the lucrative 5G space, digital solutions space, which is a high-growth area. From a technical perspective, today's move was also very important. The stock broke past a key resistance level of 1,520 rupees it had struggled to cross multiple times in the past. When they finally clear it, it's a major breakthrough. Next up on our list of star performers is Tata Motors, a powerhouse in the automotive world. The stock accelerated by a strong 3.5% today, closing at Rs 150. Just like with Tech Mahindra, this move came with very strong trading volumes, real widespread buying interest. Tata Motors has been a favorite among investors for a while, thanks to its incredible turnaround story and clear leadership in electric vehicles. Today's performance reaffirms investor confidence in the company's direction and execution. Immediate trigger: excellent monthly sales for August 2025, released after market hours yesterday. Numbers beat most analysts' estimates, especially in the passenger vehicle segment. EV sales showed robust, double-digit growth. That's the headline: EV momentum. Like a star batsman getting to play on his favorite home pitch, he is expected to score big, not just selling more cars, but improving profitability. Jaguar Land Rover was a concern, but in recent quarters it's turned around, with improving margins and a strong order book. Combine booming domestic sales, EV leadership, and a recovering JLR, a multi-engine vehicle firing on all cylinders. Lesson: strategic vision plus execution drives stock price. Shifting our focus to the healthcare space, another stock that made a healthy jump today was Cipla, one of India's leading pharmaceutical companies. The stock rose by a solid 3%, closing at 1,680 rupees. The pharma sector can sometimes be complex, with its fortunes tied to drug discoveries, patents, regulatory approvals. However, today's move in Cipla was driven by a piece of news that is relatively easy to understand and appreciate. The company received a significant approval from the U.S. Food and Drug Administration, which is the regulatory body for healthcare products in the United States. Specifically, Cipla got the final approval to launch a generic version of a widely used respiratory drug in the U.S. market. For a pharma company, getting a U.S. FDA approval is like a movie getting a green light from a major Hollywood studio. The U.S. is the largest and most profitable pharmaceutical market in the world, and launching a generic drug there can be a huge financial boost. Generic drugs are cheaper versions of brand-name drugs whose patents have expired. By getting approval, Cipla can now manufacture and sell this drug, capturing a piece of a very large and profitable market. This news is particularly sweet for Cipla because respiratory medicine is one of its core strengths. It's like a star batsman getting to play on his favorite home pitch. He is expected to score big. This approval not only means potential for new revenue streams, but also reinforces Cipla's reputation as a high-quality manufacturer capable of meeting the stringent standards of the US FDA. In the pharmaceutical world, a good compliance track record is worth its weight in gold, as it reduces the risk of future regulatory problems, which can be very costly for a company. For us, the key educational takeaway from Cipla's move is the immense importance of regulatory approvals in the pharma sector. A single approval can change the earnings outlook for a company overnight. Our final stock for today's lesson is not a flashy high-percentage gainer, but a steady giant HDFC Bank. The stock, a heavyweight in the Nifty 50, climbed by a respectable 1.5% to close at 1,850 rupees. While 1.5% might not sound as exciting as 4% for a massive company like HDFC Bank, this is a very significant move. Think of it as an elephant taking a large, confident stride versus a deer taking a quick leap. The elephant's stride has more power and impact on the ground it covers. Similarly, a positive move in a heavyweight stock like HDFC Bank contributes significantly to the overall rise of the Nifty Sensex. The positive sentiment around HDFC Bank today was driven by a couple of factors. Firstly, as the overall economic outlook improves, banks are among the first to benefit. When businesses are growing and people are confident, they borrow more money to expand and spend, which directly increases a bank's business. The strong PMI data we discussed earlier is a clear positive for the banking sector. Secondly, there was a positive brokerage report that circulated today, where a well-known research firm reiterated its buy rating on HDFC Bank, setting a higher target price. Such reports can influence the decisions of large institutional investors. After its major merger with HDFC Limited, investors have been keenly watching the bank's performance, particularly its deposit growth and margin figures. Today's positive move suggests that the market is growing more confident in the bank's ability to navigate the complexities of this massive integration successfully. A steady climb in the stock price, backed by good volume, indicates that long-term investors are accumulating the stock, believing in its future growth story. It shows faith in the management's strategy to create a financial powerhouse that can capture an even larger share of the Indian market. The learning here is about the role of bellwether stocks. Bellwether stocks, like HDFC Bank, are leaders in their industry whose performance is often seen as an indicator of the health of the entire sector, and sometimes the economy itself. Their movements are closely watched and can influence overall market sentiment. While they may not offer the explosive gains of smaller stocks, their steady, consistent growth forms the backbone of many investment portfolios. HDFC Bank's performance today reminds us that investing is not always about chasing the fastest runner. Sometimes it's about backing the strongest and most reliable marathoner. So after a fascinating day on Dalal Street, let's recap our main learnings. First and foremost, the market ended the day on a strong positive note. The Nifty 50 gained around 0.75%. Sensex gained around 0.75%. Both indices closed near their day's high. This upward move was broad-based, with more stocks advancing than declining, a clear sign of a healthy market. The rally was fueled by positive global news, strong domestic data, manufacturing PMI, and continued buying from foreign institutional investors. Bulls were clearly in control. Our sector analysis showed a clear divergence. IT sector, stellar performance. Auto sector, stellar performance. Investor focus shifted. Sector rotation. Understanding this rotation is a key skill. Breakout stock deep dives gave practical lessons. Tech Mahindra surged on a major contract win. Order book matters. Tata Motors, strategic EV bet plus execution equals sign sustained excitement. Cipla, regulatory approvals, especially US FDA, are pivotal. HDFC Bank's steady climb highlighted the importance of bellwether stocks. Please remember, for educational purposes only, we aim to help you connect news, data, and stock price movements, not give investment advice. The market is dynamic and complex. Observe and learn consistently. Today's key lesson: the market is a forward-looking machine. It rewards future outlook. New contract. It rewards future outlook. New product. It rewards future outlook. New market approval. Keep learning, stay curious, and happy investing. If you enjoyed this analysis, please subscribe to our channel for more updates and insights.